How do you know when to sell underperforming assets in your portfolio? Imagine your investment portfolio is like a garden. Some plants flourish, while others struggle or wither. Knowing when to remove those struggling plants can help your garden grow stronger. The same idea applies to your investments. You want to keep the healthy and remove the ones that are not doing well. But how do you decide when an asset is truly underperforming enough to sell? First, look at how the asset is doing over time. If it consistently falls short of its benchmark or category averages over 1, 3, or 5 years, that's a sign it might have a problem. A bad quarter here and there is normal, but ongoing lagging suggests it might be time to consider selling. Next, check if there has been a change in management or strategy. If a fund or managed asset switches managers or shifts its investment approach, its performance can change. If the new management lacks a proven track record or the strategy no longer matches your goals, it could be a good reason to sell. Another key point is whether the asset still fits your personal investment goals or risk tolerance. If your risk appetite has changed or your objectives have shifted, holding onto an asset that no longer aligns can be risky. For example, if you're now more conservative and the asset has become more volatile, it might be better to sell. Also, compare the expected future returns of the underperforming asset with other options. If you find better opportunities that could boost your overall returns, selling the underperformer to reinvest makes sense. Setting predefined price or performance targets can help remove emotion from your decision. When an asset hits your set threshold, say a specific price or a maximum loss, you can sell without second-guessing. Tax considerations also matter. Selling assets at a loss can offset gains elsewhere, reducing your tax bill. If you need cash for other expenses or to rebalance your portfolio, selling underperformers can provide that liquidity. To make the decision, review your portfolio regularly. Analyze whether the underperformance is due to temporary market conditions or fundamental issues. Evaluate the asset's future prospects, including cash flow and market trends. Always consider transaction costs and tax impacts before selling. If you're unsure, consulting a financial advisor can give you an objective view. In the end, selling underperforming assets makes sense when they no longer support your goals, better opportunities are available, or holding them introduces more risk or cost than benefit. Staying disciplined with this approach helps you keep your portfolio aligned with your long-term financial plan and can improve your overall investment results.